Hey, everybody. Welcome to Energy Impacts Podcast. I'm here today. I'm David Blackman, your host or co host, along with Stuart G. Turley. Actually, I don't know what Stu's middle name is, but uh, who is the host of the Energy News Beat podcast and the guy who sets all this up for us. We are here today with our special guest, return engagement from Josh Young, the head of Bison Interests, one of the great gurus of oil and gas. How you doing today, Josh?
I'm good. How are you?
Just wonderful. Just wonderful. It's a beautiful day in Texas. Stu, how's things in Oklahoma, man?
I'll tell you, it's all wet, and nasty, and everything. I'm just all sitting here looking at it, and I saw some beautiful eagles this morning. So between the eagles, coyotes, and bears, I'm all good.
Wet and nasty, nothing wrong with that. It's often wet and nasty in the oil patch too. So we're good to go here. Josh, first, just give everybody your elevator speech about Bison Interests before we get into the Q&A.
Sure. Yeah. So I have two hats, and actually we're about to launch a merch store for one of those. So I'll actually literally have a hat for it in a bit. So I run a small investment firm that invests in publicly traded oil and gas companies. And we launched that a little more than a decade ago. So great timing. And if anyone doesn't know, that was sarcasm. The last decade or so has been quite rough with a few bright spots. And then in actually earlier this year, we decided to launch, somehow got this big social media following, which is wonderful. I love getting to interact with so many different interesting people. Launched a newsletter called Bison Insights, where I share various stock ideas and interview various folks. And just honestly, a lot of it was to keep myself out of trouble by here, I just shared this on social media. I get asked probably 5 times a day what my favorite oil and gas stocks are, and if I can give someone a stock idea. And from a compliance perspective, it's catastrophic. And so having all that in one spot with a disclosure where someone is paying something, but they also understand I'm not recommending them anything, I'm just sort of sharing educational, informational stuff, is fantastic, because it's there. And I can update stuff where relevant there, and they can look at it, and I don't have to try to remember which stock I told which person to whatever. And also there's very, very clear disclaimers that, if I own something, I say it. If I don't, I say it. If my funds I advise own something, I say it or not. And, so anyway, so that's perfect. And then Stu's saying he wants me to talk about the oil market. Do you want to do that now, or do you guys want to do?
Wait, just one little thing before we do that is just to be sure everyone knows Bison Interests is your Substack site, so that's where they can find you.
Bison Insights is my Substack, and that's
Bison
the newsletter. That's the sort of the thing for general consumption. And again, there's all these rules around qualified investors, accredited investors, and whatever for my investment advisory business. And so for this sort of thing, it's wonderful to have this, because now I have something I can actually point people to and say, hey, go here, and I can recommend that they come and subscribe to it. And it's a nominal amount of money, and it's not whatever. It's not like, hey, give me $1 million to go,
Right.
run. And I'm still doing that, but it's so much simpler to be able to just have, from a public perspective, this one thing. And the performance on it it's been on it. So I thought over time the ideas I would share would do well and would outperform, but I didn't think that they would do this well this quickly. So it's great. I don't think I've sold a single share of anything I've talked about so far.
Wow.
I will at some point for sure, especially if things get out of whack in terms of position sizing or whatever, but
Right.
it's sort of fun. And then
I've known you a long time, Josh. This is Nancy Pelosi kind of numbers. This is absolutely within the realm. This is not Kramer numbers. I got Kramer numbers. So anything Kramer says, I do the exact opposite. Now, this is Nancy Pelosi kind of numbers.
Yeah, and also just that second one, that was a crazy high risk. There's a real chance of a zero there. There's still a chance of a zero there. So that's not, these other things were stocks. This was a, post-bankruptcy warrants. So very complicated, high risk. But that's the other excuse for setting up a newsletter is, hey, I can write about whatever I want. I don't have to worry about, hey, is this going to go to, a huge distribution? There's a modest and growing number of subscribers, but not the 117 or whatever 1,000 Twitter followers or whatever that I have. And so, it's nice to have that sort of defined space where I can disclaim my interest and my involvement, and where people can understand that these things are, I think it's higher risk, I say I think it's higher risk, and so on. So anyway, so that's not, that one probably, I don't know how to take it out, to be fair, but these other things where it's, up 20 versus up 5, I think is maybe more indicative than up 412% versus, oil stocks up 4 or whatever.
That is quite the return there.
Hey, Josh, we've got some new oil sanctions that just absolutely dropped on us, and we want to kind of bring these on up and say, hey, what do you think is going to happen? I've got an opinion of sanctions, and I think that President Trump is doing a phenomenal job with his domestic policies, and I think that he's listening to the warmongers trying to end the war in Ukraine. And I think that President Putin showed up in Alaska ready to do a business deal and end the war. But President Trump, he wants to do business because he is tapped out. I think President Putin is tapped out on his oil reserves. Then we have the new sanctions that just kicked in. And I think by President Trump, putting sanctions on India, and then the EU additional sanctions, all of a sudden yesterday, Josh, we saw a huge price just go boom. Here we go. We're starting off to the races again. My oil bull in the backyard's kind of happy. He goes, hey, Stu, they're raising prices here. So what do you think's going on with all that?
I don't know. I think it's been very weird and disappointing how we've dealt with sanctions on Iran. Here, 1 second. I'm just sharing this on social media just so people can see.
Yeah, me too.
And then we'll close this up so it doesn't affect the connection. So I don't know. I'm not sure I really understand what's going on in Russia. I'm not sure I really understand Trump's foreign policy. I liked the idea of America First. I worry about some of the connections that we're making in the Middle East and sort of what they want and are trying to do and how different that could be from our general, this America First framework. So I liked that, and I'm not sure. I would like us to adhere to that better. Sanctions are so complicated, but the worst thing you can possibly do is threaten something, say you're doing something and not do it. It's credibility destroying. And so, hopefully we enforce these sanctions we imposed. I don't exactly understand why now we're sanctioning Russia. I just don't like, the whole thing is sort of strange and disconcerting. And so what I'd like, if it was up to me, was real strict sanctions on Iranian oil that's enforced, because it's smaller, it's actually doable. These guys fund terrorism. They fund all kinds of terrible stuff. They were involved with a lot of American soldiers' deaths and so on. And so, that to me seems like real simple, real America First. And we're not even doing that. And here we are saying we're going to go sanction millions of barrels a day of Russian oil and try to prevent India and China from buying it. I don't know. I don't get it. I don't know that I believe that it's going to get, that's actually going to get cut off. And then actually, David, it was exciting. I think this is the first time I was written about it or quoted in Forbes, and it wasn't you. So where I said that, where it's like, hey, this would be a big if true sort of in terms of oil market. I think oil should be higher, but not necessarily because of this. But I'm real interested in your guys' perspectives on that.
Well, I think so much of it is tied up in the president's obsession with keeping oil prices down, right? I mean, he's doing all these things. I think the reason why he doesn't strictly enforce the sanctions on Iran, it's because he doesn't want to take 2 million barrels a day off the market and cause prices to go up $10, $15, because that costs people at the gas pump, and we've got the lowest gasoline prices right now in 4 years. And so he's got this, he's just, his whole energy policy is a self-conflicting thing between the talk about drill baby drill that isn't going to happen at $60 oil, as opposed to low gas prices that isn't going to happen at $80 oil. And so he's just keeps going back and forth on that. We did see the oil price go up a few dollars. I guess this morning it's still over 61, which is kind of nice given that it was down below 57 the other day. And most of that appears to be a reaction to two things. One, the sanctions on Russia, with the market kind of anticipating some of Russia's barrels going off the market, and optimism about Trump's upcoming meeting with Xi Jinping, and the progress that could be made there on rare earth minerals and other issues between our two countries. I wonder if you have a view on what happens if that meeting doesn't come off to oil markets. What might happen in oil markets because the Chinese have not yet confirmed the meeting with President Trump next week. I mean, everybody's sitting around waiting to hear some announcement out of the Chinese government that meeting is actually going to happen. If it doesn't happen, what do you think might be the impact on crude markets? Because it's all interrelated, obviously.
I'm actually more worried about what Trump tweeted yesterday, late last night, actually. Apparently he became aware, or whomever runs his Twitter account, I think he's only doing that sometimes. It appears sometimes maybe Barron has it to go promote random crypto scams or various other things. But I'm really worried about his post about Canada and how he was complaining. He claimed that some Canadian funded nonprofit posted, or some Canadian group posted a quote from Reagan, and he claimed that it was AI and fake. But it appears to be actually just a quote from Reagan, who was a free market, fair but open trade advocate. And so I just worry, I worried about this with the last administration as well. I think when you have someone who appears to be sort of slipping away from reality, you get sort of very weird, sort of divergent policies. And so this idea of like trying to co-opt Reagan's legacy, and literally a video of Reagan saying, "I don't like tariffs, let's have free markets and fair trade," and then claiming it's fake, and then punishing our ally. That's, we have a great trade relationship with Canada. I mean, there's lots of problems with Canada and lots of problems in America, but like trade is not one of those problems. Trade, I think we're actually a net beneficiary. I shouldn't say that too loud, but the U.S. net beneficiary of trade. Like that should be the framework. The relationship we have with Canada from a trade perspective is net beneficial. So let's do that with everyone. Don't punish them. And then also, it does. I think Reagan was one of the best presidents that we've had in America, measured on a number of different perspectives.
I'm a big Reagan fan.
And so taking his legacy and trying to reappropriate it and saying that it doesn't take much. You just literally click on the link of and even the Reagan Institute, or where they claimed that Trump was right, but you just click on their video that they say, and you listen for 1 minute. And Reagan says that he is pro-free trade and pro-fair trade and doesn't like tariffs.
But if you listen to the whole speech, what I think the Reagan Institute's problem was twofold. Number one, Ontario didn't pre-clear the use of that video, which they have the full copyright to in advance. And number two, they believe that if you watch the whole speech, it is taken out of context and somewhat misleading as to what Reagan was saying related to the specific issue that was at hand in that speech, which was Reagan putting a new tariff on Japan for its discriminatory trade practices. Back in the late 80s, people need to remember that Japan was pretty dominant in the U.S. automotive market and engaged in a lot of very aggressive trade practices vis-a-vis the United States to protect that market share. And so Reagan responded with, which compared to what Trump's doing, a pretty small tariff on Japan's imports into the U.S. But anyway, yeah, it's all, you know,
and compare
shot
that
across the bow, and Trump's going to reverse that here within a few days. Those talks will be back on.
and compare that to the new prime minister for Japan, who is a conservative female. I think that it's going to change from Reagan putting the sanctions on Japan back then to Japan helping the new trading blocs. And I think that as her conservative leadership, she's got a huge Japan bond market issue to take care of. And I think that if she gets the trade with us going, I think it's going to make a huge difference and a very good thing for us.
Well, I hope so. It'd be good to have a better relationship with Japan than we've had the last few years in terms of trade. But, I've read just a few things about her. I don't know enough. I was actually planning on this weekend taking kind of a deep dive into her because I'm not familiar with her other than the headlines we've seen this week.
I will say on trade and related to Japan, that part of sort of growing up is accepting that good things can happen from people you dislike and supporting things that came from those people. And so, I went through that recently with sharing my latest idea where it's like, hey, sort of holding my nose and buying this thing. Like, I'm not so thrilled with some of the aspects of it, but there's a lot of upside here. And, I view my role as trying to find upside that's asymmetric, regardless of sort of whether I like or dislike, if I find it distasteful, but it's, I can say I find it distasteful and then find the thing to be compelling. And so I can't help but think of Obama's TPP, and there's very little that Obama did. And it's possible that this was over like begrudgingly and whatever, similar to like Clinton balancing the budget, where he was very opposed to that, but he gets credit for it because it happened under his administration. So TPP, this idea of having a free trade zone with no tariffs and no trade barriers across, it was like 14 countries or something. What a great idea. Protection of private property, protection of IP, no trade barriers with countries that have enormous trade barriers, and the ability to counter China's growing influence, which even then, now it's way bigger, and to counter their dumping of various manufactured goods. Again, now it's way bigger. I do think it's a little unfortunate that we're going the stick and bigger stick route instead of the carrot route with our allies. So I really wish that we would. And again, it's not up to me, but I think we'd all be better off, including, the average American worker would be much better off with low trade barriers and essentially a free trade zone across these different countries that buy tons of our stuff. And, Canada made me think of this where, look, like what we want in America is a strong, prosperous Canada because they buy tons of our stuff. So let's like get them, before, not like, oh, let's endorse Mark Carney, this like sort of socialist wacko who, doesn't even apparently like he helps facilitate this entity he was chairman of, avoiding billions of dollars of taxes in Canada. And he's now promoting supposedly sustainability, but really it's just shifting emissions to China away from Canada.
Of course.
I think we're so much better off. And it's not me in the portfolio manager role here in Houston, Texas. It's the, welder in, middle of Ohio and the farmer in Iowa and just so many different people who are such big beneficiaries of expanding markets. So I did re-listen actually to the whole speech that Reagan gave. And then I went down a little bit of a rabbit hole last night, re-listening to some of the Milton Friedman stuff on trade and tariffs and so on. And I just think we have such a wonderful opportunity, especially now that we've imposed tariffs, where there's this opportunity to roll that back and get into this great mutual free trade policy where we could end up with significant gains. And will it be good for oil? Yes, in the long run. In the short run, I'm not sure. Good, bad, hard to tell. But I don't know that this meeting with Xi matters so much. I think that what matters more is how we navigate how we navigate our trade agreements and economic policies with our allies who we're in healthy bilateral economic relationships with already.
Well, but don't you think, I mean, if we have if these ongoing disruptions, and we're already seeing pretty big fallout in the car industry right now because the chips that they need aren't coming in because rare earth minerals have been restricted by China and the products manufactured from them. If that continues for a long term, don't you think that that is going to have a pretty significant disruption in the U.S. economy because you're not going to be able to build cars? You're not going to be able to fill the military's needs because we don't make those magnets here in the United States, and we don't mine enough of the minerals that we have underground to supply our own needs. So, I mean, it seems to me that getting this resolved with China one way or another, freeing up those imports, is a pretty significant thing for the U.S. economy, isn't it?
So I think the problem is the volatility of this and the uncertainty of it,
Okay.
and the high probability of inconsistent policy where something is imposed and then withdrawn. And so I think that volatility is far more damaging than any specific policy. And the information problem around it is extremely damaging. It's sort of the known thing. So the basic problem with conventional economics is that there's a value to information. So this idea that you maximize utility under certain constraints, the sort of basic, sort of classic Adam Smith economics, is that there's a cost to information. You don't always know that your information is correct. And so the volatility and inconsistency of American policy, first under Biden with all these regulations and taxes, and now under Trump with the sort of back and forth on tariffs and other sorts of similar issues, is that you can't invest to address the problem. And so what we should have is a consistent policy of lowering trade barriers and free trade to the extent possible, and high barriers with sort of unfair trade partners that would allow. We don't need the government to go put money, and frankly, I think we should not have the government putting money into some of these things where very clearly there's some politicians and other folks buying ahead of the announcements, and I mean just terrible, crazy stuff of looting essentially by our leaders and their affiliates. But I think what we need isn't government money. What we just need is policy certainty with some significant guarantee of continuity on that policy certainty. So the rare earth thing, as I understand it, isn't actually even a time lag so much, because you could go get these mines. So there's some mines that just need to get restarted. You could get some of this manufacturing or refining done to the environmental standards, which are basically almost none, of China. The problem isn't that manufacturing and refining. The problem is that it's immensely polluting. And so the Greta Thunbergs of the world, who have one standard for the world and the other standard for, the US and the West and whatever, would freak out. And there's all these environmental laws and regulations we put in. And I'm not even sure that those laws are so bad. The problem is that we don't enforce those rules on the things that we import. And so we have this sort of weird thing where China is destroying our oceans and our water and our air. And in exchange, we get these rare earths where we pretend like there isn't all this pollution from China. So
well, you said it earlier. What we've done over the past 45 years is export our emissions and our pollution to China, right? I mean, that's exactly what we've done. And now we're surprised that China is using the dominance of the market that they've established as leverage in a negotiation. It's hilarious, really, when you think about it. It's just they people in China, the Chinese government must think Americans are the stupidest people on earth. I mean, they really must.
Well, we are.
I mean, given the way we're reacting to what they're doing today, I mean, we begged them to do this for half a century now. Well, and now they're using it as leverage, and all of a sudden they're the bad guys. Anyway,
isn't net zero a cause? I mean, it is a net zero is basically offloading everything to China. China has been supporting net zero. Germany is now, since 2017, they have made 2 million less cars since 2017 because of deindustrialization and net zero. So if you're trying to go after net zero, it is absolutely, the EU has pushed Germany off the edge. They are no longer a manufacturing hub. And can we get it back? I'm excited about the Australian minerals deal that we just signed. In that I'm kind of curious. I'm trying to find out more about the specific contracts and how that is going to play out. And good investments could be joint made between the companies, the mining companies, and the ore being processed in Australia. I'm very excited about the potential of that. Gallium is one that I know that we are now able to produce in the U.S. 50% for our military this year. That is a home run. One down, 37 more to go.
Yeah, there's a lot more to go. Yeah.
But again, just getting back to the problem. So the problem is that we have a solution, which is to build this stuff. And we have choices in terms of how polluting we're going to allow this stuff to be. But we also have a problem, which is that very likely the next time there is a Democrat-run executive branch, we're going to end up with a lot of these things shut down or onerously punished and regulated. And so this sort of decision, hey, let's build this thing because it's important for national security and for our economy, could lead to, hey, well, you did it, thanks. Now we'll take that and you'll get no return on your investment. And so again, that regulatory and tax uncertainty is what I think is the real problem here. And the volatility of the Trump administration itself, I think, contributes to the elevated risk that there's going to be a policy shift after the Trump administration. And frankly, there may even be one where in a year we end up with a trade agreement with China and we're getting rare earths again. I mean, that's what happened. No one wants to talk about this, but Molycorp went bankrupt because they were built out for this thing when China was restricting rare earth exports. And then China unrestricted rare earth exports, and this thing collapsed. And then here you are, sort of round two. But we saw how that ended, and you had the combination of the onerous regulations under the Obama administration and then the Biden administration, along with China sort of flooding the market again. So I think without real clarity, long-term clarity on this policy, it's impossible for the free market and private enterprise to do what they need to do. And instead, we've sort of supplanted that with almost like fascist style. Hey, we're going to, do this thing where the central government puts in money, chooses winners and losers. There are all these weird trades that happen right before it. With undisclosed parties who seem to have information about which companies are getting these rewards or whatever, and then they get them, and then their stocks go up a lot. But we don't even know. The weirdest part is, hey, these things, when are the insiders going to go dump them and then short them? And then we find out, oh, hey, there's a free trade agreement with China or some sort of trade agreement, and then everything collapses again. So again, I think those are real issues. The one I will throw in, there's one benefit of the Trump administration, which is I've been really negative on them so far this morning. They are reducing taxes and regulations broadly, and there's an enormous stimulative effect from that. And I think people can't see it. It takes a while for it to show up in the economic data, but it's great to see deregulation. It's great to see this trajectory towards lower taxes. And then it's actually sort of, I probably shouldn't say this, but it's great to see the government shut down, and yet here we are living and breathing and things are fine. And so,
it's been shut down for 3 weeks now and hardly anybody's noticed except the folks who aren't getting paychecks, right?
Which some of that I want them to get paid. Like I want our military to get paid.
Me too.
But a lot of this, why don't we just shut it all down and then, restart the central services, and that's it.
Yeah. I mean, didn't we think that Russ Vought and OMB were going to do some of that during the shutdown, and they have hardly done anything, which is a shame, because this is a great opportunity to unilaterally do some of that stuff. Because, I mean, the reality is, like you say, half of what the government does, we don't need. Doesn't affect anybody, doesn't help anybody in our society, and is just a complete waste of money. And the Democrats are holding out for $1.5 trillion in additional spending on stuff that doesn't help any American citizen in reality. That's what's going on in the damn shutdown. But I totally agree with you on that. Today, the Dow, and some of these policies I think you're talking about must be working, because the Dow is at another all-time record high as we speak today. Gold and silver prices are falling. And I guess the S&P is actually at another all-time high as well. Maybe the NASDAQ too. I'm not sure about that one. So stocks are doing well. We had a good inflation report. I wonder how much of that is attributable to low gasoline prices. Probably a significant part of that. But anyway, the economy does seem to be generally healthy, doesn't it?
Well,
At least
one thing that we should talk about related to that is these strong oil consumption numbers and strong gasoline consumption numbers.
Stu's got a chart on that. Yeah.
Yeah, we have some severe narrative violation here, where it turns out that the developed world isn't done growing its oil demand, shockingly. So
hard to believe.
Yeah,
I know, right? Who'd have thunk that, like, as you deregulate and lower taxes, that demand would rise. And even this chart, this is a good chart, but like really the last 3 months, it's just phenomenal. And again, I think you can point to deregulation as the driver on this. And the other fascinating part of this is that you have these like multiple currents, because you have illegal immigrants being sent out of the U.S., and there's less of an increase in immigrants living here. And so that immigration flow was driving incremental oil consumption too, sort of disproportionately. Some of the wealthiest, if you're living in New York City or whatever, you might be using a lot less oil. But when you move from wherever, Central America or Sub-Saharan Africa to Southwest U.S., you end up using a lot more oil per day. And so there was this extra bump in demand from that we're getting rid of to some extent, and we're still seeing demand growth. So it's really, really powerful how much demand you get from this deregulation.
Josh, OPEC has been releasing back their production, walking back their production quotas and things. And I saw a post yesterday that is unconfirmed. I can't confirm it, but with these newest sanctions on Russia, Saudi Arabia was putting out from this post that is unconfirmed, but they were saying, we want to start bringing out rigs out of cold storage to start building rigs again. That to me is huge. If it is proven to be true, if Saudi Arabia is bringing rigs out of cold storage to start drilling more, that means their spare capacity has been proven again not there.
Yeah, I saw that. I loved it. It's so funny. These guys, they're like, there's these weird sort of concurrent narratives that go on. There's this like, oh, the biggest glut ever, right? And there's still 7 million or whatever barrels a day of spare capacity in OPEC, and it's probably higher, right? And at the same time, you see these guys like they try. So actually, I interviewed Arjun recently for this newsletter for Bison Insights. It was so fun. Honestly, it was so great. It's fun to be on the other side of the camera on occasion, and like just getting to ask those couple of follow-ups and then just stopping talking, which I'm hard at, or it's hard for me. I'm not good at. But it was so interesting. So it's really like, once you try to like pull the thread a little on these narratives, it's like, okay, well, you have these concurrent, conflicting bearish narratives. So pick one, right? Because like, trying to think, okay, so the narrative is the Saudis are flooding the oil market, because really Saudis have been the majority of this incremental OPEC quota increase and then actual production increase so far this year. I think they're actually the outright majority, if not the plurality of those barrels. And so, because they had cut a lot, supposedly. But then anytime, this was Arjun that had pointed this out, I don't think it was in my interview with him, I think he had talked about it previously. Anytime the Saudis get over 10 million barrels a day, their inventories start falling and they start trying to add more rigs. And so that's not, this is now my commentary, Occam's razor. Hey, anytime I say, hey, I need to do more than a certain amount of a thing, and then I need to like try to backfill and like get deplete reserves, I mean,
Right.
that tells you, I think, everything you need to know. So I think I actually this was explained to me by a few different folks. I'm not sure I 100% believe it, but one of the theories was that this was the OPEC increasing their quotas was the Saudis getting back at Russia and maybe some of the other Gulf states getting back
Right.
at Russia for flooding the market in 2020. And they were going to go embarrass Russia because they were going to show that Russia can't produce what their quota level is. But the funny part is maybe in the process of doing that, they're also showing the world that they can't produce what their spare capacity numbers are too. And, maybe this means they don't get invited back to Vienna next February. That's okay. I like the guys that run OPEC a lot, but, I'm just still going to say what I think. But I do think the spare capacity numbers are way overstated. And I think they should just be honest with it. And I think the OPEC leadership thinks that, but maybe not the countries. They have this very sort of weird ego stuff tied to their potential spare capacity. But if everyone knew that you really only had probably 1 million barrels a day of spare capacity from here, I mean, oil would be $30 a barrel higher, and you'd have 100 rigs more running in the US right now, and maybe 50 more in Canada. So that's what I think about that. I'm curious about your guys' take. How do you interpret this, the news that they're starting to order more of these high-spec drill ships and jackups to start drilling offshore some more in Saudi Arabia in the context of this market? What do you think?
Well, I think you just nailed it. I mean, I don't have any disagreement with anything you just said.
I think that they're absolutely getting ready for Russia is not capable of building out anymore. And that's why when President Putin showed up in Alaska, he was ready to do a deal. And that is the way to end the war. Go and just say flat out, we're done paying for it. President Putin, and that's why when he showed up, he handed President Trump a declaration on the Sakhalin project and was trying to find a couple $2 billion to pay back Exxon because Exxon was out a few $1 billion. Now you have the EU trying to use Russian money out of the EU's money changing hand system to pay Ukraine, and that is going to backfire if they do that. I'm just telling you right now, that ain't a good idea. So you sit back and take a look at how this could end. I think that Russia needs to have the United States as an export as a service. Get our great oil and gas guys out there. Let's do business with Russia. Let's end the war. Let's quit killing people and call it a day. I agree with President Trump on that, and we need to quit listening to Lindsey Graham. Lindsey Graham, you need to just retire, please. Sorry,
Well,
did I just say that out
part
loud?
of the
I'm
problem.
sorry.
We've got so many of those guys in the Senate and ladies in the Senate who are so tied into the defense industry and getting all that money from them that it really influences their politics. And I'm afraid, like you, that Trump has been spending too much time listening to the warmongers in his own cabinet.
Let me ask this question
this
of you
deal.
guys. This brings us to Venezuela. Venezuela is one of the OPEC members. They have billions of reserves there. But the Monroe Doctrine has been ignored for 30 to 40 years. And I think that is what is going on right now. I don't think it's narco-terrorism, because for the last 30 years, China has really focused on South America. And now that we're seeing B-1 bombers running around Venezuela right now, I think that it is more about getting China out of South America, in my opinion, than it is narco-terrorism blowing up a couple boats. I think it's got a bigger thing that the administration is not talking about.
Well, but narco-terrorism is the hook, right? It's the hook for the visuals. And but yeah, I think obviously, like most other things internationally, it all kind of revolves around China and what to do about them.
I mean, China still has both ports on each end of the Panama Canal, and that's still not resolved yet. however, we have a bunch of military sitting out there. So I think President Trump is doing a good thing by trying to focus again on our hemisphere, because if the net zero crowd, the EU, fails, and you take a look at the UK failing, and they start doing more business with China, I think the new trading blocks are going to make a difference. And Josh, you were spot on when you mentioned earlier about trading partners with, Saudi Arabia and Qatar and the other big deals that President Trump has done. But I would like to do business with Russia, Qatar, Saudi Arabia, India, and do business and not wars. I'm more of a non-war kind of guy.
Yeah, I mean, I am too, but why are we building and expanding our military base in Qatar? Why do we have a defense alliance with Qatar? These guys sponsor terrorists, and they sponsor some of the groups that used to attack our soldiers when we were in Iraq. And they now have part of an air base here. I had posted they're building their own, that they apparently are getting like a building or something on a U.S. air base.
It's a normal thing because they're not getting an air base. They are actually at Mountain Home Air Force Base. They are getting a hangar because they are buying our airplane
and improving the hangar there.
They're improving the hangar, and it's a normal thing because they're going to be buying so many planes that they are going to need their pilots trained. And I've got a lot of contacts that believe me, Josh, I reached out on that one going, "Way, what are they doing?" No, it is simply just because they're buying so many planes, they're going to need a place to train. And Mountain Home Air Force Base is where my dad trained before he went to Vietnam in the F4.
Yeah, I just think we should, again, just focus on this sort of America first thing. And so
I agree.
Crazy idea. We should be better friends with our friends. And I like the idea of it being Department of War instead of Department of Defense, right? That sort of like positioning makes sense to me. And maybe we should be better enemies with our enemies too. And I think this sort of like gray area where we like give hangars to folks that like sponsor killing Americans and sponsor like Al Jazeera with their super anti-American, anti-Western, anti-Jewish and Christian, anti-whatever propaganda. I mean, these aren't our friends, even if they give our president a plane and a golf course. And so they might be his friends, but they're not our friends. And I liked this idea so much of America first as the leader of America being America first. Like, what a cool idea. Like, let's, try to align, our policies with what's best for us. And so, why should our enemies have a hangar, and why should we have a base in a place where they're funding these things that are truly antithetical to our values and to us, and where they've been in our lifetimes with unrepentant supporters.
I think a big part of the issue there is that we do have these obligations in the Middle East and compelling national security interests in keeping the Strait of Hormuz open. And one of the things Trump is doing there, the administration is doing with Qatar, is trying to improve relationships with that country that is situated on the Persian Gulf, just adjacent to Iran, as a potential check on Iran and any efforts Iran might take to shut down the Strait of Hormuz. And so it all gets caught up. It's very complicated and gets caught up in those politics. Plus, for better or worse, America agreed to assume the responsibility as the policeman of the world to keep all of the shipping lanes open as part of the Marshall Plan and other agreements that were signed in the wake of World War II. And we're still tied to those 80-year-old agreements. And, I agree with you. I think maybe the time has come where we shouldn't be tied to agreements that were made in a completely different world 80 years ago, and things have changed a lot since then. And maybe we should let the Middle East defend for
So
itself.
let's ask
But
the 1,780 people that are live right now with us and say, can we get rid of the Jones Act right now? Because that is
Jones,
just trying.
oh my
That
God,
thing
now
is
we're going to
only
do the
keeping
Jones.
200 people in employment because they've got a fantastic lobbying group. That it just is what a
Dumbest
way.
law ever written in American history.
It is awful.
Yeah,
Sorry.
it's just so stupid.
Is that any worse than pardoning a known terror money launderer just now, who apparently is like deeply involved with the president's family's business on the cryptocurrency side? I don't know. I feel like there's this sort of, I feel like we just need to have sort of clear delineations, and maybe we have these obligations, but I don't believe that we have an obligation to have American soldiers and equipment in the Middle East. And even if we're going to try to police shipping lanes, we don't need to have that base in Qatar. And I think if we're going to have a base somewhere, it should not be in a place where they run 24/7 anti-American propaganda and where they fund, they were funding a lot of these college protests or whatever. They were funding, I mean, they're just, they're malignant. If you have a malignant tumor, you don't say, oh, it's part of me. You cut it out and get rid of it. And so to me, this is like, and they're also our biggest competitor in the LNG market. So they're not our trade partner. They're our enemy, and they're our opponent commercially, in addition to funding these bad things.
Well, that brings up another topic, actually. A related topic. What did you think about the letter that Chris Wright sent jointly with the Qatari minister, who's also the head of the Qatari National Oil Company, to the EU in opposition to the CS3D rules? What do you think?
What is it?
How do you see that?
A broken clock is right twice a day? I don't know.
No, but I just thought that was an interesting partnership. And it shows, I think it shows how important the administration views getting rid of that particular bit of EU madness is, in terms of the ability for American companies to keep doing business over there. And it's obviously a lot of those companies are in the oil and gas business, right? ExxonMobil's been very active on that.
I just think we should be better friends with our friends. I think if we need Qatar to intervene to try to affect European trade policy and regulations that are hurting our economy, we're in deep trouble. And I think that we should deal with that by dealing with it, not by buddying up with folks who, again, are antithetical to our moral and religious values, who have sponsored killing Americans, kidnapping Americans, all kinds of stuff, and who are commercial competitors. Like, I don't think it's just not, I feel like we were promised a set of things, and it's sort of this opposite of those things. And so, yes, like, did they say things that I agree with? Yes. But is it weird to have, to me was almost as weird as Chris Wright going to, I know we disagreed about this, going to the fields that Saudi Arabia bought for a 1/1000th the value, and given a big thumbs up. Similar idea. Like, this is what weak, ineffective leaders do. It's not what strong, competent leaders do. Strong, competent leaders, if we have a problem with Europe, we go to Europe and say, we have a problem with you. And we say, hey, here, we're going to solve it. And you do it privately.
Well, I think we're doing that too, aren't we?
Maybe, but I don't think you'd go, this to me, again, it's the opposite of like the TPP style thing. You find your friends and you get into economic relationships with your friends, and you find your natural defense allies like Mexico and Canada, and you figure out how to sort of coordinate with them, and you don't like tilt the odds in favor of like socialists getting elected in Canada like Carney, which Trump did. You don't buddy up with the communists in Mexico. You try to help promote freedom and democracy and free trade and deregulation and stuff in the countries that are directly relevant to you. You have that impact, which you do have some control over. And we've gone weirdly the other way under Trump even, which again is very hard to understand. So why does all this matter for oil and gas, right? So you have weird policies that are disruptive, and seem likely to me to backfire. And so, like, that's the problem, right? The problem is it's not good for America, but it's also not good for the continuation of free, open trade or shipping lanes or borders or whatever. And so I think there's going to be uncertainty of supply of LNG from Qatar and other similar countries. I think even with us, the more we're involved there, the more we're going to upset that, we're rocking the boat there by being like, we have a base there. Like, it doesn't make any sense. And, we learned this very painfully, sadly, at a huge cost of money and human lives. But what we have bases in Afghanistan for, what we occupy Iraq for a decade, just terrible. So similar idea. Why does that matter? It increases the volatility of supply. It increases the price, which I guess is good because I own it, but I'd rather have, certainty of supply, certainty of growth, and a higher long run price than a higher average price, but average because you end up with crazy price spikes and then crazy crashes.
But on the question of volatility of supply, I can't remember personally. I don't remember a time since I've really been paying attention to oil markets, which is 40 years, where we've had a lower fear premium built into the crude oil price than we do today. I think it's at an all-time. I don't think there's any fear premium in the price of crude oil today. And I think there's been times in my career, which began in 1980 in the oil business, when we had $30, $40 of fear premium in the price of oil.
Oh,
so I mean,
tanker would get hit in the Red Sea, and boom.
Who are friends and who isn't. But right. But you look around, and in the wake of that peace deal in Gaza, which is still pretty tenuous, admittedly, I don't think we have any fear premium in the price of oil.
Yeah, one, I agree, and there should be. And maybe there's now a few dollars because of this. There's now a fear that Trump, for once, will enforce sanctions, at least for his second
Russia,
administration. But yeah, maybe we have like $3 priced in here, but yeah, there probably should be 20. With the current policy set, there maybe should be 30, because you point to that peace deal. The whole concept was there was going to be a release of hostages, a release of prisoners who in many cases were armed murderers and terrorists, and then a disarming of Hamas. Well, the disarming didn't happen, and now they're saying it won't happen. And so there's no peace, right? It's just a very temporary, I think it's a Arabic term, hudna or whatever, where it's like the ceasefire before the resumption of conflict. Like that's literally their belief, right? There's apparently this whole framework where you're like supposed to lie in order to accomplish that better, in order to then, ambush your opponent. And I don't know, it's always weird. Right. I followed the Middle East for a long time. I lived in Israel, actually in the West Bank for a year in my junior year of college. And it was always interesting to me. You could watch the Arabic videos of the Hamas leaders or PLO leaders or whatever, terrorist groups, and what they would say to their people in Arabic. And then you could see what they would say in English. And they were the complete opposite message. It's like, I gotta listen to what you're telling your people, because you're probably, if you lie to them, they're going to hang you. And if you lie to the world will just say, oh, you have no agency. We forgive you. We were colonialists. So I think that's a good framework for understanding what's going on there. And unfortunately, that framework tells me war is in the offing, and maybe we end up with a much higher oil risk premium, which maybe the fair price for oil here outside of a risk premium would be 70 or 75. There's some growth, there's some concerns. OPEC's bringing oil on the market. That seems sort of fair to me. And then maybe you should have a much higher price just because there is this increasing risk of supply disruption.
Let me turn this question to both of you on what is possibly going to happen when the EU has announced that they're going to enforce getting rid of all gas out of Russia. And you have the Siberia 2 pipeline. It's 5 years away from being even completed before he's going to be able to replace, because the Siberia 2 pipeline will be able to be almost equivalent of the Nord Stream 1 and 2 combined. And so when you take a look at that amount of volume that thing is going to be able to move, it's basically replacing almost the EU amount, depending on how the contract works out. But let's ask this question. Natural gas, if they have a cold winter and the Vlugenvlagen, I don't even know the word for it, but when they don't have any wind, and thank you, bless you. They don't have any wind in Germany. They don't have, their natural gas supply is low, and they're going to be requiring more and more. Spain had the incredible blackout this year. They are using more natural gas now, importing in, because they're needing to balance the grid out of there. I see a huge natural gas demand coming for the EU in this mess.
Yeah, I mean, if there's a cold winter, for sure. But it's been a while since we had one in Europe.
They keep doubling and tripling down on these failing energy policies. Yeah. You saw there was this terrible blackout randomly in Spain, right? I don't know if it was particularly hot or cold. It was just blackout, right? And they couldn't restart it because too much of their grid is powered by solar and wind. So they couldn't, you have to sort of surge power apparently to sort of like kickstart the grid, and they just couldn't do it. And they just keep doing it. And now it reminds me. So one of the things that got me to be way more vocal, it was probably bad for my business, but I don't regret it. There's only so much money you can make. Was after the winter storm here. I mean, I'm a capitalist, but also I will trade off pushing for rational economic and energy policy in exchange for being a little less wealthy. That's fine. So the winter storm, it happened because ERCOT was, and the sort of the system was managed by people who were increasingly wacko, sort of almost like environmental terrorists. And so we get this winter storm, and it's cold, and there's insufficient power. And it's going to be a real problem for the alternative energy narrative because the sun's not shining and the wind's not blowing. So what do? They cut the power to the gas processing facilities and to the gas pipelines. And then they say, oh, well, gas was down. I was like, no kidding. You guys cut it. It's not a gas problem. It's a people problem. So similar in Spain, right, where it's a people problem. And now we need more batteries and we need more solar. No, you need rational economic policy. And I'm not averse to a portion of the power mix being solar and wind, especially in places where there's a high cost of fuel, where there's other challenges. It makes sense. Look, you want to make 10% of your contribution solar? Great. Probably good. Probably better for the planet, right? 10, 15, 5, I don't know. You go 50, you're going to have blackouts, and then you're going to get mad, and it's going to be and they're doing the same sort of nonsense. I've been reading the stories as they develop, and you even had some of the reporters who normally greenwash everything, who were a little critical of Spain at first, and now, of course, it's fossil fuels are bad. What we need is a grid modernization and more batteries, and it's just not. It's just not there. So, I think people sort of cause their own problems. So I would be much more excited. I think Europe's sort of making their own sort of weird, bad choices. Will they stop buying Russian gas? I don't know. But why on earth were they sending Ukraine money for weapons and sending Ukraine weapons while buying Russian gas? Pick one. The concept there. And it's economic, right? So I don't like that they were buying Russian gas because, I invest in companies that supply gas that they could have been buying. But the humanitarian aspect is way worse. Just think about that, right? They're funding both sides of a war in which young people and civilians are dying. That's just it's just a humanitarian catastrophe. And then they lecture us and lecture the world about climate and all kinds of other nonsense. While they're essentially funding a war on both sides of the war and supplying both sides of the war. I mean, really, truly morally challenged. But when you talk about winter, it does look like the forecasts are starting to ramp up, that there might be a cold winter in the U.S. And I don't want to bet on weather, but if there is a cold winter in the U.S., if there is, again, there's some chance, right? You just deal with it like a normal distribution and probability curve, whatever. In that scenario, that there's a cold winter in the U.S., we could see natural gas prices at levels we last saw in 2022. We could see, we're going to do this merch store thing. I think we're doing $7 Henry Hub shirts and hats. And I think, I don't know that that's sustainable at all. I think 5 maybe is sustainable, but 7 seems like it could be in the offing if we have a cold winter.
I'm going to come get me one of those caps.
Yeah.
I think you're spot on. In fact, that's where I was going with that question, was because I think that is a real endeavor there. I think I like your assessment of Europe's funding both sides of the war. I don't get that. I absolutely kind of have some pain on that one. But as we sit here and we're rolling down here to the time, we still have 2,076 people watching this show here. I want to make sure that everybody knows to go check out um, uh, Bison Insights. It is a great publication there, Josh. You're doing great things. I loved your interview with Murtry. He is a cool cat. I've interviewed him before as well too. He is wasn't he the CEO of ConocoPhillips, or on the board there, or something?
He is on the board there,
Yep.
and he's the head of energy consulting for Veritan, which is an energy sort of strategy consulting firm and media and other stuff. So it's a very cool job. He's out there talking to some of the most senior people running the largest and sort of most complex energy companies in the world, from what I can tell. He didn't say that, but that's what that role means. And then, he used to run, he ran energy research for Goldman Sachs for a little while. So, he was the oil permeable in the last cycle. I'm sort of stepping into his shoes. I'm not working for Goldman, but everyone was bearish and he was just bullish all that way through. And I think he really is able to look through it. But yeah, it's been the returns again, like past performance may not be indicative, but this has been a really fun ride so far, sharing some of these ideas. And while it may not be indicative, I can certainly say that I hope, while I do not expect, I hope that this continues. And it's been really fun sharing these different ideas, even the ones where, I'll hold my nose and buy it or hold my nose and talk about it. Like, they're still fun to talk about. And, I had no expectation that these things would do as well as they've done, as quickly as they've done. And hopefully the next ones are well received. We're close to releasing the next idea I've been working on early November, and just super fun. And thank you for highlighting this. It's really bisoninsights.info. Check it out. It's so cool to be able to share these ideas in this way. I think we put out an update on every idea I've written about so far, whether it's a CEO interview or a CFO interview, whether it's me doing it or a conference presentation, or some new transaction. And actually, there was a transaction yesterday we should talk about generally, but it's relevant for this portfolio too. JERA, I think I might be pronouncing that right, a Japanese energy consortium. They just bought this small Haynesville asset for a not small amount of money. They paid $1.5 billion for 500 million cubic feet a day, which is just extraordinary. I mean, so much money, so little production. One of the companies we talked about is a Haynesville producer, been in Haynesville for a long time. They have almost that production in the Haynesville, and they, I think, have way better wells. I look at the single well economics, far superior, much bigger in terms of just total volumes, and more land. And they trade for a fraction of that $1.5 billion value. And they have all this other stuff too. So it's pretty cool. I'm interested in your guys' take on that transaction. And then we should spend a little time talking about your guys, David and Stu, you both have your own things. David, you have this Substack that we should spend some time talking about. And Stu, let's talk about Energy Newsbeat. But first, let's talk, if you guys want to talk about this Haynesville transaction, what it means for Japan to be buying gas. I'm interested. I'm excited because of this comp for my investment. But what do you guys think it means for them to be coming in and paying this kind of price for this kind of asset?
Well, Stu probably has more insight than I do, because I was not aware of that transaction until you talked about it. It seems like a very high price. So apparently they're expecting high gas prices in the near future.
And I also was kind of JERA also.
JERA.
Yeah, and I was also looking at them and BP halting the development of Beacon Wind Project off the East Coast. So, I think it was a smart. I got tickled because on Energy Newsbeat, I had the the other one that we were just talking about, but I also noticed that they were they're divesting themselves of wind, but then they were sitting there going around and buying and getting their own supply lines all fixed in. So, and I was kind of scratching what little hair I have left on that one as well too, because I was sitting there kind of going, I'm with you, Josh. I was like, that did not make much sense.
BP also backed out recently of what was going to be the world's biggest biofuels project near Stockholm. That was over 50% already completed, and they canceled further investment in that as well.
So you mean investors want returns? What's up with that?
Hard to imagine. I just don't understand it.
And I've had so much fun. I actually had a bunch of folks on LinkedIn that I put out that you have 3 to 8 years, you have catastrophic failures in wind farms, and man, that you should see the heads exploding when I put that one out there. That one was absolute. You need to go buy a wind farm. I said I drive by one every day, and they're hideous. So anyway,
incidentally, I need to add one thing. This is my Substack, David Blackman's Energy Editions. But I was advised by a friend that I probably ought to let everyone know that on X, which is really the only social media I use to any great extent, my handle is not David Blackman. It's actually at Energy Absurdity, because that's what I write about mainly, or used to anyway. It's become a little more serious endeavor here in recent months over at Energy Editions. So I rebranded it. Anyway, just to make it easier for folks to find me on X.
And you can also find me on the energynewsbeat.substack.com and energynewsbeat.com or energynewsbeat.co. So tell you what, this was a lot of fun, guys.
Should we give it, let's give it 5 or 10 more minutes. Do you guys have the time, or is this?
Yes. No, this is, I got lots of time. I just want to make sure we got those in there for those folks that have been coming in, because I noticed a bunch of people piling in. But when you sit back, we've got the EU, we've got the UK and everything else. We're seeing Herr Starmer just put out and said digital ID is going to put us in the next generation, or it's going to bring us up to date. What a knucklehead. Then you have the former British leader who's now saying we need to get away from net zero. You have Norway, which actually went through and they said we're getting out of natural gas, invades Russia. Now they're into natural gas. They're investing several $1 billion into natural gas so they can go to the North Sea. You have the UK getting out of the North Sea, shutting it all down, taxing it with windfall profits tax. You can't buy this kind of entertainment and stupid. Holy smokes. And what about Trudeau saying there was never any LNG exports, and now there's been 7 or 8 exports of LNG shipments out of Canada? Go Canada. I would love to see all those that are still listening. I would love to annex Alberta. I would like to leave the rest of Canada alone. I don't really want any of them here, but I'd love Alberta. I love all my Alberta friends.
And can we buy Greenland while we're at it?
Absolutely.
And retake the Panama Canal. I'm all for all that.
Okay. So I saw a proposal recently, and again, I'm not endorsing any of this, but I saw a proposal that was intriguing, again, with my economist hat on, where someone suggested that we trade Minnesota, which has been, there's been a lot of immigrants and a lot of questions here, that on a, especially when you do it on a currency adjusted basis, we trade Minnesota to Canada, and we get Alberta and Saskatchewan in trade, and actually it would be net positive for Canada on a GDP basis, currency adjusted. And there's probably more sort of political and cultural alignment in those two provinces with the US, particularly with Montana and some North Dakota states that are right there, than with Eastern Canada. So
I mean, you've got You've got Terry Edom up there, who's a great author, and I've thoroughly enjoyed he and Heidi McKillop. And I love my time interviewing them. They're great Albertans, all the oil companies that I used to drag you around and bore you to tears with. But I mean, they're great. And we could buy all the oil. We might even get a pipeline redone again. But think about how much was hurt by killing the Keystone.
But people keep bringing Keystone back up again. I don't.
It's going to cost us $3 billion because we got to pay back what was the companies that had put that money back in. Very much like we were talking about earlier. It's a big ticket to get that started again. Just like Putin was going to
pulled out of the ground. There's no pipe left in the ground.
That's what I'm saying. They lost billions. And that's what I was trying to say with President Putin, was trying to get Exxon his money back, because he made a commitment that he was going to do that and get the money back to Exxon because he needs help. That goes back to our full circle, and that's how we end the war. We don't have President Trump going through a drive-through. We don't have President Trump working the drive-through. We have President Trump doing a deal with Putin to end the cotton-picking war, because the people, it appears to me, Zelensky, when he canceled the elections and he was put in power as a plant by the the MI6 and all those guys, he was installed. Have you seen that dude dance? Holy smokes.
I'll speak up for him just for a second. Look, I think I was very critical of him. I think there's a lot of corruption in Ukraine, a lot of challenges. I would say that what I've seen from him in the last year or so has been really impressive. I think he's shown real interest in trying to get a resolution of the war. I think he's shown a real sort of evolution in terms of how he's navigated things with the U.S. I think, he was properly called out by U.S. leaders, and I think he sort of addressed that. And I think at this point, from what I can tell, he's not the burden to ceasefire or peace there.
Then why won't he do elections again?
Wartime elections are always hard. I mean, frankly, like, we had an election in the U.S. in the middle of the Civil War. We had an election during World War II. We had the UK had devastating elections right after World War II that led to, quasi-socialism implemented, which the UK still is not fully recovered from. I mean, I don't know. I think it's like a fun talking point, but I actually have a little trouble with that. I'm not sure I think it's as good, as powerful a point as you're thinking.
I think how hard it's going to be for the UK to recover from the full-blown communism it's experiencing today under Starmer. This is, we talk about being better friends to our friends. I think one of the things Trump is trying to deal with is figuring out who our friends are going to be in 10 years, because the UK may not be one of them, depending on how things continue to deteriorate there. Germany is trending in a bad way. And much of the European continent is trending in a very disturbing way. And so I think one of the things they're trying to grapple with is figuring out where our trading blocks, as Stu likes to talk about, are going to be 10 years from now, because they may not be Eurocentric like they have been throughout history. And even Canada could become a bit of a problem on our northern border as a result of all the radical leftism that has invaded those countries. So, it's I understand your criticisms of the Trump administration. He's all over the place every day, and I can't keep up, quite honestly. But he was left behind a real pile of horse dung from the previous president, or his auto pen, whatever it was that we had for the 4 years prior. And it's a pretty tough deal to navigate.
So I think one of the challenges with a country like the UK, and frankly, I think we've had this problem in the US too, is as you get more extreme policies, you end up with, and as you sort of tilt or drift the wrong direction, overall, economic, social, all kinds of different energy policies, you sort of tilt the wrong way, you end up with bad leaders on both sides. You end up with, Boris Johnson was not great, and
Oh,
then
no.
Liz Truss was a mess. Actually, I sort of liked her policies, but her stuff got wrecked.
Oh, yeah.
Her markets, they crashed right after she came in, and so you end up with a situation where the Conservative Party is messed up and the Liberal Party is messed up,
Yeah.
and so you end up with like not a lot of hope, I think, for people, and so I think we're at risk of it too. Is part of why I'm so critical of the Trump administration. Is I think that there is this window to. Oh, that's great! I see it now. I didn't see it before. My oil bowl in the backyard.
Bull in
I like
the
that.
backyard. Is that AI or is that real?
Oh no, that's I do have 2 burn barrels in the backyard, yes, but I don't have horns on them.
Okay.
Yeah, so I don't know. I think there's a real risk here, and there's even more of a risk in the UK that, like you're saying, David, that they don't fully recover. That being said, I remain optimistic, and I actually think if we had a little bit of a different approach, where we're more involved in helping our allies maintain their cohesion as societies and economies and so on, I think that is actually America first for the concerns and the reasons you're saying, which is like these things. We can go shop for new friends, or we can help our friends when they're going through a hard time. And so I think there's this real opportunity to help, and I'd like to see that, and I think that is America first to be. I'm not saying we send troops or clearly or anything like that, but let's I think it makes sense to engage with them and to try to encourage. Similar to what we're doing in, let's say, Colombia, where we're encouraging free elections and we're encouraging rational, democratic processes. Unfortunately, it looks like the sort of communist wacko president of Colombia may have actually been involved with killing his political opponent who was going to destroy him in elections. So that's really important, I think, to step up for that. In terms of oil and gas, so you guys don't have you hadn't seen that JERA $1.5 billion.
Seen it. Stu probably has.
I have, and I've written about it, but I really think that you're going to see more of that, and that is an outstanding point that energy security starts at home. And you're going to see actually that energy security, you're seeing AI data centers, they're going to start, it wouldn't surprise me to see Amazon starting to buy mineral rights. And when you start getting in it, you start buying your supply chain, that's when you really start taking a look at it and saying, wait a minute. You sit back and take a look at the data centers. I talk to a lot of folks that know a heck of a lot more than I do, and that's why I talk to them about where to put data centers and how to put data centers in, how you source the equipment, how you stage them out. I don't know any of that, but I know who to talk to, and that's what I've been trying to find out is what are the next trends. And you take a look at Japan buying into their own supply chain so they can buy into an LNG supply chain. Same thing that Saudi Arabia is doing, same thing that Qatar is doing. And I don't have a problem with that. And when you take a look at Japan signing up to help buy into Alaska LNG, I'm okay with that. And at some point, you have to realize you don't want them to have controlling shares. I don't mind the investment to help guarantee them, but it brings up energy security starts at home. And I would like to advocate for any CEOs that are out there. And if you're sitting there scratching your head, if you've not looked at your bottom line and understand your power requirements to keep your door open, when Chris Wright, our great secretary, Chris Wright, inherited this energy department, we were facing humongous blackouts based off of the previous administration's running of the energy department. We still could be there for natural disasters or other disasters. There are still 419 major grid interconnects that China potentially could shut down at any minute. I have not got an answer yet on that one from the administration. It is a potential problem. They could remotely shut down a huge chunk with a button.
Stu, you mentioned one thing in there that actually came up. I was just at these 2 different energy conferences here in Houston. They had them downtown over the last 3 days. And I think the most interesting thing I heard, and I won't use the names because out of respect to them, but apparently the major tech companies and the hyperscalers are starting to consume energy research and consulting services. And so it wouldn't surprise me if these guys, one or all of them, and maybe if one does it, then the rest of them will too, in the same way as they funded wind farms and solar panels and, in some cases, even like nuclear companies, which won't have anything for 20 years, but, whatever, the stocks are up. So, hey, and in some cases, self-driving vehicles, other things like that, that they would come in and potentially buy the gas reserves and gas production they need in order to backstop their power generation for their data centers. And so I think when that happens, which seems increasingly likely based on their now consumption of this information that you would want to start figuring this stuff out, whoever moves first probably gets the best deal, because the values of these assets go crazy as soon as they go from, upstream oil and gas assets that are sort of tarnished for some reason and trade at, 3 or 4 times operating cash flow to, oh, hey, the hyperscalers need them or the Mag 7 are buying them. These things should be 20 times or whatever, which is, we've seen high prices for upstream assets paid at tops of cycles before, especially, considering how low the actual prices of the commodities are, seeing high multiples on some of these. And again, I'm not saying that they'd pay 20 times, but, you could definitely see, I think this JERA asset, the best I can tell, on a run rate basis, which again is not their underwriting, they're underwriting growing it, and then sort of what their operating cash flow based on the press release. But it looks like they bought it for something like 10 times or 12 times run rate cash flow. So, but they're going to grow it, so it'll be 6 or 7 or something next year. It looks like high level numbers could be off by a little, but I think you could see numbers even higher than that if you have a Meta or a Google or Amazon or whatever come in and go buy a gas field. And I think you could see them even rationalize it. You say, hey, we're doing this. This is, lower emission than the 3 out of the 5 other options for us. And it also gets us our data centers sooner. And look, we planted 500,000 trees or something like that. So I think that could be coming. It was my biggest takeaway. And then the other big takeaway was apparently the oil majors in West Texas, Southeast New Mexico, and some other shale fields are starting to ramp their power generation. It sounds like through joint ventures, not directly operated themselves, but gigawatts of power coming from the Exxons and Chevrons and so on of the world, which again, I don't think those are in the announcements. In the slate of power projects, and some of them may be in power projects that just they haven't said where the gas is coming from exactly, but some of them, my sense is, they didn't say this, my sense is some of that is not yet in everyone's gas balances for their supply demand numbers. And I would point this, so I see a lot of folks who try to model precisely oil supply demand or gas supply demand. And it's great to have those balances and see them. Part of why I don't try to do that to the nth degree of precision is because when you model something, whether it's a company or you model supply demand balances, you can end up being precisely wrong. And so rather than try to do that, I try to track many other sort of modeling attempts and then keep a high level view, and then do things like go to industry conferences and keep ears open and post lots of stuff on social media so I can find out what is it they say, the best way to get a correct answer of something is to post something wrong on social media. And there's some like internet principle associated with that. So that's been very helpful. But there's stuff that's not in the balances, it looks like, actually both on the oil side where you see demand growing in the US, which was just not in people's forecasts at all for this year. And I think isn't in people's balances appropriately for what the look forward looks like. And then on the gas side, I think you have the LNG facilities, I think people sort of get. I think there'll be even more demand from those. But these data centers, like, there's more of them. They're getting built faster, and very big companies are very focused on them in tech and in energy and elsewhere. So I think there's like weirdly, I hate jumping on a train, but we're like getting on sort of a consensus view. But I actually think the consensus might not be bullish enough in the short term in terms of how much more gas demand we're going to get from these data centers. And I guess that's what I heard. That was my takeaway. What do you guys think about that? Does that make sense?
It makes total sense. Yeah.
I think you're spot on. There's two or three things that really make a huge difference. Right now, up in the East Coast, there are some areas are 230% increase in electricity prices over the last several years because of the data centers going in and their government data centers going in. So the transmission lines and everything else are going in. You've had 100% in Tulsa, Oklahoma. And Bartlesville actually had a thing. If you're within 70 miles of a data center, you now are going to start seeing it going in. Josh, you are hitting it out of the park with your comments, because I believe that as we get further behind the meter, data centers are not going to be reporting the amount of gas. Let's take Stargate in Abilene, Texas, right down the road from my house. And that is, when you sit back and take a look, that thing is going to be able to power 130,000 homes when it finally comes online. When you take 130,000 homes of natural gas, and it's not being figured into the normal flows, it's not going to go through Henry Hub or however it's going to go through. You could miss it when you start trying to do exact figuring and mathing with a crayon from the EIA. I mean, it could be kind of interesting. So you hit it right out of the stinking park.
Yeah, it doesn't surprise me that these tech companies are thinking about taking equity interests in the gas itself. That's, there's a long history of that happening in oil and gas over the centuries, or 160 years history of the railroads did that in the 1880s, 1890s. Some of the big railroads did it. General Electric and Westinghouse did it. So there's a long history of that kind of thing happening by other industries that have a big need for the product.
And Josh, you brought up another great point, and that is when you take a look at renewables in Spain and renewables on the thing, there is a healthy correlation of, as soon as you put in wind or solar on a grid, prices go up. But let's take New Jersey just as an example in the United States. They are in the top most expensive electricity in the United States, but they've got nuclear and natural gas. Why are they so high? They do have a little bit of a wind farm there. Oh, it's policy, Democrat run policy. So you can't just make a blatant statement saying, oh, if you put wind and solar on it, now you got to have storage. But you can take ERCOT. ERCOT has 92 gigawatts that we normally need in Texas, but they have 188 gigawatts that they have on nameplate capacity because of wind and solar. So, but we're at 15 cents kilowatt per hour ballpark. And then you've got 28 kilowatt up there. So there's a significant difference in stupid regulatory problems caused by Democrats. So it's kind of fun. Sorry.
Well, let's not throw too many stones, because I'm not sure that we reformed ERCOT sufficiently. The next blackouts we have, they're going to say, "Oh, this shows that fossil fuels are blah blah blah." And it's like, no, like look at you guys celebrate when there's wind and solar contribution to ERCOT, and then you blame the gas when the solar and wind are down and we get blackouts, and and hopefully it doesn't happen again. But unfortunately, we haven't seen the improvements that we were hoping for, and then a lot of the backup power stuff that was supposed to get put in is now just getting shifted over to data centers, where, like you said, off grid and essentially gone for purposes of the grid. And so, grid reliability is not as improved as it should be or should have been. And, everyone's getting ready to write the next story about how, natural gas power is unreliable, even though it's like 99.99%. And actually, funny story about that. One thing I heard at the conference, so the government data centers, they try to get to 100% reliability. They want them never to go down. And I'm sure you guys saw with AWS was down for a day or so a couple of days ago.
It was just like 4 hours, and it drove everybody nuts. Half the internet shut down. Yeah.
Yeah.
Anyway, go ahead.
Yeah,
Sorry.
you're like, emails weren't all going out, whatever. And so you think about it. And so I was talking to different people involved with these data center projects and, supplying the power to them, supplying the gas to them. And, some of the oil majors are involved in some of these power projects now, or they've been involved on solar, wind, whatever, battery backup. And, one of the challenges is that if you try to do the solar and wind plus battery solution for this stuff, you introduce a higher failure rate. And so people were complaining, oh, hey, this is ridiculous. A 99% failure rate should be fine. And I pointed out, no, you want to go. And then they talked about how the government stuff was ridiculous because they wanted 100% uptime. I thought, well, look, you can't, 100% is impossible, right? And they acknowledge that. But if you can get as close to 100% as possible, that is a huge win. And everyone cares, whether it's for being able to go shopping literally on Amazon or sending an email, or, for national security purposes or disaster relief or whatever. And as you try to get towards that 100%, you actually do want a small amount of batteries just in case you have a gas power plant out or whatever. But gas is the closest you get, and then secondarily coal, and then nuclear power. And so you sort of need that sort of mix. And, we're headed towards this unreliable direction. And then these data centers, I mean, the biggest shift, I'm sure you guys noticed this in the last couple of years as people have been talking about these things. It used to be that the Amazons and Facebooks and whatever, they were talking about, oh, we're 100% renewable and we're putting all these fossil fuels behind us. And now they're going and, doing deals with nuclear facilities, which they were opposed to until recently. And then they're also doing these major natural gas power gen deals. And so I'm really interested in seeing how that evolves, and whether there are maybe some data centers already that were built on this sort of old renewable focused concept that maybe have had some failures. Like what happened with AWS in those 4 hours? Was it some data center that was like built into their matrix that somehow couldn't get disconnected? And it was, the wind wasn't blowing. Anyway, I don't know for sure, but there is this move towards 100% reliability, and you don't get 100% reliability with solar plus battery or solar plus wind plus battery. You get that with fossil fuels.
Yeah, you can't get it with wind and solar and batteries. And my favorite racket in all of that is that the big tech company that's doing the data center will announce, well, we're going to be building exactly enough wind and solar capacity to power this whole operation just with purely renewables. And they do build it, right? But what they also do is secure natural gas power to actually provide the power to the data center, and they try to offload the power generated by the wind and solar because it's not reliable enough to run the data center. But they get the virtue signal at the same time they get their power.
I like how you say that. They get the virtue signal at the same time as they get their power. That's a good line. Stu, you see my new addition to my shelf? I found this. Just going through some old stuff.
I saw that. You got the intercom guy there, and I absolutely. I was noticing that earlier because I have a few of those, so it's pretty cool.
I've got my bobblehead. I got the Bison interest. One of my friends in the oil field, drilling fluids and chemicals business. He's a woodworker as a hobby. And so got the Bison interests, little like wood plate thing, and then the oil barrel with some oil from OPEC. So I don't know which field they got it from, but it's sort of the collection's growing of these random oil related knickknacks. But I felt like the Drill BB Drill bobblehead really was appropriate considering what our ostensible energy policy goals are.
On our next show, I've got my full working derrick with my company logos on it that I'll have sitting right here working. The oil derrick that I've got it's about this big by about that big, a full working derrick.
Hey, I've got a little sliver of Eagle Ford shale around here somewhere I'll have to bring out for the next one.
That sounds great.
Okay,
right. Cool. Here, why don't we go through one more time where people can find us, and then maybe let's wrap it up.
You bet. Let's get ready to rumble.
Okay, so Bison Insights, again, bisoninsights.info, check it out. I think we're still through the end of October. We have a founders subscription sale. We're at 50% off, so get it before it's gone. I do think we will raise prices after that. So, if anyone's interested, it's worth checking out. And the performance of the ideas that I've shared has been great, and past performance may not be indicative. So yeah, please be sure to come check it out.
And I'm at David Blackman's Energy Editions. It's blackman.substack.com. And you can find me on X at Energy Absurdity, because I'm stupid and I picked a bad handle to use over there. But anyway, come see me.
And you can find me on theenergynewsbeat.substack.com or energynewsbeat.co or energynewsbeat.com. So we have a lot of fun there. I'm absolutely amazed. Before we cut out of here, I average between 100 and 200,000 people a day on my site, and the amount of hackers. I'd like to give all my hackers a shout out. You knuckleheads! I get 10,000 denial of service attacks a day. You chowderheads need to go away. You
Find a
make
different
me
hobby.
just go away, man.
Leave Stu alone.
The only 2 days that I have not been attacked were the days that X went down. Everybody piled over and took X down. So I must be meaner than X. I don't know. But anyway.
Stu, what's going on with that? Do you have any idea? Did anyone contact you and tell you what they were trying to do?
I hired some people, and I know who's doing it, and it's irritating.
Is it like an environmental group, or is it a competitor that's mad that you're putting out news?
I'm really not going to say on this podcast because they're
That's
actually in Washington, D.C. So,
wow.
With that.
Well then, okay. This was great. Thank you guys for having me on. It was a real pleasure. And Baby Bison number 3 is coming very soon. So I don't know when we're going to be able to do the next one, but hopefully after things have settled down a little, it'll be great to do another one of these with you guys.
Absolutely.
All right. Sounds great. Congratulations. We'll see y'all soon.
Thanks everyone for joining us.